just a quick piece of news flow that I thought was quite interesting. In East Africa, we have Seni Adetu, who's the CEO of East African Breweries. He's moving ahead to head up the Guinness Nigeria unit, and Guinness Nigeria CEO moving over to East African Breweries. I wonder if there's going to be any reaction from the Guinness shareholders to this piece of news.
Yeah, hi, Samuel. I really doubt there will be any reaction. I think they're all Guinness people, so I guess Guinness people are moving from East Africa to West Africa. I don't think it's going to make any significant impact on the company's strategy. Of course, you have to bear in mind that a lot of things that happen in Guinness Nigeria are directed from Diageo, so I really doubt it's going to be a significant move. On the other hand, we have seen the market move significantly in April. It's up 6%. I remember at the end of March, the market was actually down for the year. At this point, it's now up about 6.3% for the year. So a very strong move on the back of the results that we saw most of April. Joining me in the studio to give us his views on those results is Femi Oladehin. Femi, it's great to have you on the show today.
Hi, Wole.
Give me a sense of your thoughts on this rally we've seen. Clearly strong momentum in April on the back of the results. Do you think this thing can be sustained?
Possibly. I think what is going to drive the market going forward, and you recall that that's always been the theme of most of our conversations, is that the market will react to fundamentals, react to fundamental growth in underlying earnings of companies, react to efficiencies that start to flow through in terms of either lower cost to income ratios or higher EBITDA or EBIT margins. And I think that what we've seen in the first quarter is that for companies who've been able to display to the market that they've been able to take a hold on their costs, as well as grow their top line numbers. We're seeing significant upside for those sort of companies. It's basically a continuation of the flight to quality that we've seen in the Nigerian market over the last 5 years. As long as companies are able to show their shareholders that there is positive growth in the horizon and they're able to continue to maintain their low cost base, I think that you would see some momentum in the market. How sustainable that is obviously will be dependent on obviously a few other factors in the markets: inflation, the direction for the currency, interest rates as well.
And of course, one company that is definitely showing some positive momentum is Nestle. Released first quarter numbers. I think it's obviously darling of the market. Turnover up 40%, profits up over 100%. I mean, that's on the back of very steady movements over the last 5 years. What does this do for your rating of the stock?
It's
because some are already saying it's a bit pricey.
I wouldn't say pricey. I mean, from a price earnings multiple basis, it's probably slightly rich. But then you've also got to realize that Nestle's done quite a lot of investments in the last 3-4 years. They've just completed the factory on the Shagamu Expressway,
right.
Which means that they're able to increase production. The challenge we've always had with
and of course,
Nestle,
they're even exporting now.
And exporting. The challenge we've always had with Nestle was that they paid out 100% of their profits as dividends. So you always had that concern: would the business be able to reinvest and grow? But obviously, because they've been able to achieve, very low-cost finance base, it means that they can also fund their financing or their expansion using external capital, but cheap external capital, and that's very important for Nestle. So the growth we've seen in Nestle isn't it's not shocking, simply because they've been able to increase their production base as well as keep their costs low, which is something they've always been very good at. And it's apparent that the financing side of the business is also well taken care of. The cost of financing is extremely cheap relative to the rest of the market, and that's fundamental in the sort of performance that we're going to see from those players within that sector. So I would expect that the likes of Cadbury, would come up with some interesting numbers as well. It's funny that in the mix you've also got a PZ who seems hung up on the security issues and all of that. And it's like, right. PZ, for example, is operating in isolation of the rest of the market. But the reality is that companies like Nestle, they've mastered the Nigerian market. They understand what consumers are looking for. Remember, they led the reduction in size of their products to ensure that even the poorest of Nigerians could afford their products. So that innovation will continue to put them, at the forefront of the market.
So I'm assuming you're still a buyer of the stock.
I would hold Nestle in my portfolio, definitely.
But will you buy at these levels?
At these levels, I think that there's a psychological limit to how far Nestle can go from a pricing point of view. I think what is good for Nestle, or what might be good for the shareholders, is to see some form of stock split that allows investors, move their minds away from that psychological 500 naira limit per share.
All right, let's talk about another company that is not delivering not so good news, obviously. That's Starcomms. once again, we're seeing them reporting losses, 17 billion loss this time around for 2011. How do we deal with this stock right now? Clearly, the market has discounted all this, or rather has priced all this in. It's trading close to its nominal value.
Yeah, Starcomms is a sell, without a doubt. I think Starcomms got their strategy wrong. And it's a point that I've always made, for the past 2-3 years about Starcomms. In the Nigerian telecom space, you can't win the voice war with the GSM providers. It's just simple. They're bigger, they're more efficient, and they can deploy much quicker. And they've also got a wider spread. So you can't compete on the voice point.
Right.
And that's what Starcomms tried to do in the beginning. They converted to the to the data market, which is where you're seeing some growth in their top line numbers. But they converted a bit too late. And they're still competing with the very big, the big players who are able to provide additional bandwidth to the customers. So the price war in the telecom space is definitely killing Starcomms. And because they've also been carrying this huge debt overhang, and it's a dollar-based debt, so which means that every time the currency weakens, and we've seen the Naira weaken, between last year and this year, about 6-7 Naira. That's right on the bottom line. And I think every 6 Naira drop in the Naira is a 1 billion Naira impact on Starcomms' debt portfolio. Okay. So that's fundamental. And I don't see any light at the tunnel at the end of the tunnel.
I think the big question is, where do they go from here in terms of
I think
their
they need
strategy?
to be sold.
Fortunately, we can't take you further, but thanks so much, Femi Oladehin, giving us his thoughts on Starcomms, the only listed telco in Nigeria.